Imagine owning a palm oil empire that has quietly been printing money, paying massive dividends, and controlling the price of edible oil across the region. Now, that same company announces it's buying two massive new plantations, one in Nigeria and another one in Ghana, and they are offering you, their shareholders, a chance to chip in for the 250 billion naira expansion at a significant discount. That company is Presco, but here's the key question investors are asking right now. The stock price has already skyrocketed at around 1,479 naira per share. Can Presco still go higher, or is this rights issue the signal that we have hit the top? Hello my colleagues, welcome back to the channel. In today's video, I'm going to break down this monumental Presco rights issue. We'll cover the real reason for the 250 billion naira they are trying to raise. It's much bigger than just growth, guys. The specific terms, the discount price, and the ratio, and how they affect you immediately. And most importantly, the strategy that tells you whether you should take up your rights and if there is still massive capital appreciation left on the table. This is a strategic move, guys, and only the investors who understand why will truly benefit. So before we jump into the numbers, please do me a favor, smash that like button so this breakdown can reach more serious investors. Subscribe to the channel if you haven't already, and there's a link to join my WhatsApp channel in the description and pinned comment. That's where I share my personal market notes and research updates in real time. Without much talk, let's jump right into today's video. Let's go. What exactly is a rights issue? It's when a company gives its existing shareholders, which is you, the loyal customers, the right to buy new shares, usually at a discounted price, in order to raise money. The keyword here is right. This is a privilege, guys. Only people who already owned Presco shares as of the qualification date of October 13, 2025 are invited to the party. If you bought your shares after the date, you won't be able to participate in this particular offer. Now, let's get into the specifics of Presco's offer. They are giving you the right to buy one new share for every 6 shares of Presco you already own, and the price is set at 1,420 naira per share. To put that into perspective, Presco was trading around 1,479 naira in the market when the announcement was finalized. That means you are getting an immediate 3.99% discount, which is approximately 4% discount on your investment right from day one. But the question isn't about the small discount, it's about what Presco is planning to do with the rest of the 250 billion naira they intend to raise, and that is where the real story begins. At the headline level, Presco says this is for expansions, but what does that actually mean? The 250 billion naira capital raise is not for routine maintenance or planting new trees on their existing land. It's for a massive transformative expansion designed to cement Presco's dominance across West Africa. Presco is essentially pursuing a 3-part strategy with this cash. First and most important is to complete the funding for 2 major acquisitions that will increase their total plantation land by a staggering 37%. This involves finalizing the purchase of Ghana Oil Palm Development Company, which you can call GOPDC, and another large Nigerian plantation, Saro Oil Palm, which you can also call SOP. This single move instantly accelerates their expansion, achieving a growth in land bank that would have otherwise taken them 3 to 5 years to acquire and develop organically. Secondly is currency diversification. The GOPDC acquisition is critical because Ghana Oil Palm generates about 41% of its revenue in euros. For a company like Presco, which is exposed to the volatility of the naira, this acquisition is a strategic hedge. It will give the new Presco group a reliable flow of foreign exchange, insulating its earning from Nigeria's ongoing currency pressures. And third is building a value chain fortress. A portion of the money will be used to expand their downstream capacity, things like new palm oil mills and refining units. Presco is relentlessly expanding capacity to maintain dominance in the market and cut Nigeria's reliance on imports, which currently costs the country hundreds of millions of dollars annually. This is not their first move like this. Presco has a history of successful aggressive expansion, which is why their half-year 2025 revenue surged by over 125% to a record 198.7 billion naira. Historically, every expansion for Presco has quickly converted into massive earning growth. Now, let's zoom out for context. Presco's story over the last few years has been about defending market dominance despite massive FX volatility and inflation. Input costs have gone through the roof, but the company has managed to stay profitable by expanding scale and improving efficiency. That 250 billion naira raise is simply the next stage of that play. Double down on capacity, expand geographically, and secure raw material supply so they are not as exposed to currency swing. This is actually ambitious and potentially rewarding, but whether it creates real value depends entirely on how fast they can execute and how efficiently the money is deployed. Now, you already know that Presco is giving you the right to buy 1 new share for every 6 shares you already held as of the qualification date. This is often written as 1 1-for-6 ratio. We know the offer price is set at 1,420 naira per share. Now let's quickly run the numbers with a simple example. Imagine you owned 600 of Presco shares on the qualification date. Because of the 1-for-6 ratio, you are entitled to 100 new shares, which is 600 divided by 6. To buy those new 100 shares, you need to invest 142,000 naira, which is basically 100 shares multiplied by the offer price of 1,420 naira per share. Now this is a key point. The rights issue is an option, not an obligation. You have three main choices. One is you can take up your rights, which is what we just calculated, and invest the cash to buy the new shares at the discounted price. Secondly is that you can sell your rights on the stock market. If the rights trade for a price, you can sell them to another investor who wants to buy Presco shares cheaper than the market price. And thirdly is that you can ignore it. Crucially, if you do nothing, your total investment is diluted, which is something every shareholder must understand. But the biggest decision isn't on how to fill the form, it's whether Presco's current valuation justifies you buying that right or making that investment at all. Now, to answer that question, let's look at why investors should trust the company's promise to use the new 215 billion naira effectively. The answer lies in their history. Presco's strategy is all about aggressive value adding expansion, and its record prove it works. Their current rights issue to raise 250 billion naira is primarily to finalize the acquisition of Ghana Oil Palm Development Company and SOP, which is Saru Oil Palm, a move that will increase their total plantation land by 37.3%. Now, this is their model: invest heavily in production and shareholders reap the rewards. For instance, following their last major push, which was the acquisition of Seat NL in 2021, the company saw an impressive growth. In the following years to come, in 2024, Presco's revenue more than doubled, growing by 102.6% to 207.5 billion naira. Their profit before tax surged by 128.7%. And for shareholders, Presco's stock price increased by an astonishing 205% in the past year alone. Presco has essentially built investor confidence by consistently converting expansion into explosive shareholder value. They are using the rights issue to fund the next stage of that exact playbook: regional dominance and currency diversification through the Ghanaian operation. So now let's go to the big question. At 1,479 naira per share, after rights issue is priced at 1,420 naira per share, is Presco still a growth investment, or has the upside been capped? Well, let's walk through the logic step by step using valuation, earnings outlook, dividends and risk, so you the investor can decide. Now here's what the number tells us. Presco trades at a PE ratio of around 11.8x based on recent earnings. By contrast, the peer company Okomu Oil is trading at a higher multiple, about 14.5x. Historically, Presco's PE ratio has been in the region of 9.4x, which means the market is now valuing it at a modest premium to its past average. Now this is what that means. On one hand, Presco's current valuation doesn't look wildly expensive when compared to its peers or its own history. On the other hand, for you to earn meaningfully upside from here, the company needs to deliver the growth that justifies that multiple. Now moving into the earnings outlook, here are the key growth levers that could drive the next leg up. First is the global palm oil demand. If it remains strong and Nigeria's edible oil consumption is expected to continue rising, if Presco's acquisition and expansion succeed, you might see a 25% plus increase in earnings over the next 12 to 24 months. The Ghana acquisition will also bring in foreign currency revenue in US dollars and in euro, which could shield earnings from naira weakness and input cost inflation. Next, we have refinery capacity expansion and increased yield per hectare, which will provide a margin upside. If Presco can grow net income by more than 16.7%, which is the dilution threshold from their 1-for-6 rights issue, then the rights issue becomes value creation. If they deliver plus 25% to 30% earnings while maintaining margins, then a re-rating towards 1,800 naira to 2,000 naira per share becomes very much possible. Again, this is assuming the broader market supports that multiple. I know I'm sounding a little bit technical, but I just hope you guys get to understand what I'm saying. The point I'm trying to make is that if their earnings grow and everything goes well, we are looking at Presco trading at 1,800 naira to 2,000 or even 2,500 naira in the next 12 to 24 months. Now let's move into the dividend story, because dividends matters, especially in Nigeria's volatile market. Presco has a strong track record of paying and growing dividends. If you believe in the company's cash flow generation and trust them to execute this raise, then this isn't just a speculative play. It becomes part of a long-term income plus growth strategy. But of course, nothing is certain. Here are the major risks you must look out for. First is execution risk. The acquisition and expansion may take longer or cost more than planned, and delays dilute value. Second, we have input and currency risk. Fertilizer, diesel, machinery costs are highly exposed to FX fluctuation. If the naira weakens sharply or import import cost rises, then margins could compress. Then we also have commodity price risk. Palm oil prices fluctuate. A drop in global palm oil price could undercut some of the growth that we have talked about in terms of their revenue and profits. Then we also have the dilution trap. If the investment doesn't generate enough profits fast enough, your share count rises due to the new shares, but your earnings per share (EPS) may flatline or even fall. So here's my take overall. Yes, at 1,479 naira, Presco still can go higher, but only under the right condition. No, it's not a free risk stock anymore because of the current stock price. But if you believe Presco will execute the acquisition expansion very quickly and also manage their cost well and grow earnings significantly, let's say by 25% plus, then the stock could move towards 1,000 to 2,000 naira in the next 12 to 24 months, which I have been saying for the most part of this video. But if you have doubts on execution or expect delays or margin pressure, then the rights issue at this price starts to look far less attractive, and your best case may just be to hold rather than to buy. Now, if after weighing all of this you still believe in Presco's long-term story and want to actually participate in this 250 billion naira rights issue, here is exactly how you can go about it. Number one is to contact your broker. They are your first stop. Just send them a short message via WhatsApp or any means of communication that you can use to reach them and tell them that, hey, I would love to participate in Presco's rights issue. What they will do is to confirm your eligibility and share the offer details with you, including what you're entitled to, meaning how many shares you can buy based on what you already hold. If you don't currently own Presco shares, you can decide to go and buy it in the open market because we are expecting the price to go further. That's if they execute properly. And the second step for those who are interested in the rights issue is to now complete that mandate form, which is basically the number of shares you want to buy and how much you're looking to put in. For example, if you hold 600 shares, a 1-for-6 rights issue means you are entitled to buy 100 new shares at the offer price of 1,420 naira. So that's 142,000 naira total if you take it up actually. But if you decide to take up half, it's also fine. Your broker won't stop you. And the next step is to fund your subscription or transfer the money to your broker, and they will take it up from there and help you execute your order. So now once the offer has closed, your new shares will be processed and credited into your CSCS account or your brokerage account. This usually takes weeks, sometimes even months. So don't panic if you don't start seeing your shares immediately. And that's it, guys. Talk to your broker, submit your mandate, transfer the money to them, and wait for your allotment. Simple and straightforward. So that's the complete story of the Presco's rights issue. We have covered why they are raising the money, their impressive track record of turning expansion into shareholder value, and the price you are expecting it to go if they execute properly. Are you buying this rights issue or sitting this one out? Drop a comment below and let me know your strategy. If you want more analysis like this and real-time updates directly from me, there's also a link in the description and pinned comment. I hope you found this video insightful, and like always, smash the like button, subscribe to the channel, and stay sharp, stay safe, invest wisely. Deal.